Hey guys, how are you? Happy Monday, wonderful week to everyone. Please give me some okay in the chat that you can see my screen, that you can hear me. Perfecto, thank you very much. So I hope you guys had some wonderful weekend, refreshed, refilled yourself, enjoyed some great sport. Congratulations to Rafael Nadal for his 19th Grand Slam title after unbelievable match. Great matches in basketball in the Mundo Basket. So it looks good. Sports are back. So I hope you guys enjoyed. And now the Forex is back. Trading is back. Monday is here. And it's time to get ready for the coming week. So first of all, those who are watching us for the first time, welcome to our family. Two main things I would request from you to do. First of all, inside the members area, make sure you watch this video tour so you have the idea how to use our members area and all the components we have here for you. Make sure this is your place to start with afterwards, after the video tour, as the most recommended webinars. Which brings me to the trading report. This is what you receive after the live trading room itself. This is a written format of what we discuss. The same list of recommended webinars you can find here. Click on the link, will direct you to the video source. This is our watch list. So what you have to do is basically click the button, and every single image would show you what do we expect to see. Below, by the way, the instruments are broken here into categories: forex, indices, commodities, stocks. Below you would find a little explanation of the technical reasons behind every single time frame. So as you can see, everything is super detailed for you. It takes a lot of effort to prepare that. That's why it is sent normally after the live trading room. It takes some time to put it all together. And here you would also be able to find some of the cryptos ideas if they are relevant and we have them. So what we will be doing now, we will go over the list. This is from Thursday. We will see what of our trade is still running, what's still working, and what has to be adjusted. And that's what we will be doing right now. We start as always with the European pairs. Our first in the Europe was the euro versus the franc. Let's open this one. The trading idea as we build here, well, from Thursday, was retraces to see a new high, deeper pullback than the expectations here, and a rally. So let's take a look how this one develops so far. Basically looking wonderful. This is the one that we got before the week was over. The correction was not creating a new low for the buys. However, it did create for us a bullish hidden divergence for trend continuations. Hey Danny, welcome. And two waves pull back, little two waves in play here. So what we got at the end of the day is what was what we were looking for. 3 higher highs, 3 higher lows, 4 a trend definition, 2 waves retrace, another shot to the upside. Going back to the main cycles we are working with now, with the weekly divergence continuously holding, we are playing here with 2 cycles, the weekly one and the one that derives from the daily. going back inside the levels, making it higher highs here in play. So unless there will be any change, the pressure here remains bullish. The expectations are for 2 deep waves correction. Weekly cycle should provide the daily 2 waves correction, therefore anything like that. So our plan, continue on the buys. Levels to pay attention to, first of all, this sorry, let me draw it correctly. This clearance area, and then we have several zones to pay attention to around this little consolidation which comes from here. And you can see this, the closer we get to 110, the stronger the pressure is expected to be, and very likely that this would round starting the deeper correction before further continuation upside. It doesn't change our plan, which remains bullish for the longer view. It just shows how the updated price is likely to develop. So for all those of you who are running with the buys, as I always say, make sure you manage that properly. Don't let the randomness, which could happen with any Trump's tweet or anything like that, surprise you and bite your profits. Our next one was the euro versus the yen, and we want to see 2 waves to the upside as a corrective cycle here. Quick reminder, what do we trade on the euro yen? It's this ride that we have here. So we want to see corrective cycle. Assuming this is the first leg developing, just take a look on all the rest of the components we have in these buys. So besides a cycle, we also have a psychological level 115 area. We have Bollinger Bands 20 candles round, as you can see, right? And of course you have inner cycles in all that you can work with. So long story short, sorry, wrong drawing. Long story short, the euro yen provides us the opportunities for the buys. So the way we wanted to work with that was, again, to verify that the first leg is a cycle. This leg has to be cycled by itself, as you know. The 1 hour chart had to be the one that verifies that. So we received it right here. Triple cycle, 2 waves correction, bullish divergence on the rounding, and a continuation. We got our breakout, we got a continuation. So the expectations are yet the same for the euro yen. Upside in the corrective cycle. Assuming this is the first structure developing there, 61.8, as you can see, around the 120 zone, slightly below, 100 is slightly higher. We have clearance zones right here, so there is a good assumption that we should be rallying towards these levels. According to the cycles we have in play, so if we work with the small one from the daily, as you can see, 50% fits in perfectly in this expansion, and on a big cycle it will be the 32 level, sorry, 38 level of the Fibos that will fit in this magnet zone. Magnet zone, I want to remind you, it's meeting points of different independent cycles on developing expansion Fibonacci levels or retracements of the bigger cycle. Okay, magnet zones are areas that are created by different independent cycles developing, and I call them magnets for one reason. They use it, they use the money, the bigger money, as a magnet to attract the money to flow directly there. So that's for the euro yen. That's the 2 euros that we had on our list, and that's pretty much it. Straightforward. The euro CAD we have been running previous week. We discussed about cashing out as the daily is slowly rounding down. This is the 145 psychological level for our chart. Had false breakouts, now develops an alternative trend and false breakouts. All that happens on a cycle level. So too many reasons why to cash out and to put a big V on that. Game over for the euro CAD previous week already. Euro dollar, I'm following these 2 waves. I believe they should end up somewhere soon inside this structure. And personally, I think this should become a critical area for the euro dollar. Would I long here? No. I don't see any real value. But technically speaking, this is a bullish pressure after triple double. And yeah, the expectations are to take it slightly higher. The reason I'm not going to work with that is because the weekly cycle isn't over yet in terms of reversal signs, not from daily, not from 4 hour. We are developing only 2 waves, not 3 higher highs, not 3 higher lows, no false breakouts and higher highs, not enough signs for Uncle Vlad. I keep it neutral. Technically speaking, it should push slightly higher. I still keep it neutral for myself. For myself, it doesn't mean it's wrong to trade. It doesn't mean it's bad or anything like that. No, for myself and neutral. So I continue with the 2 main pairs from the previous end of the week: euro franc, euro yen. One more I start to follow is the euro versus the kiwi. With this correction that we were following and a bullish hidden divergence that is developing here. What I want to see in there is this structure, ending divergence, and then will be after buys. This is the massive zone for the euro yen, as you can see, surrounding the 117. A lot of orders fight here, as you can see, right? Very, very possible to build the 2 waves here and start the rallies afterwards. It's yet early to follow. I don't see any value for sales currently, as these 2 waves with the divergence reach the 38.2, kind of even the bigger one, the bigger view here, right next to the 38.2. I don't see any value in the sells. I definitely will see the value in buys if it develops as I expect it to. But we trade facts. The fact is currently there is no development, there is no setup, there is no structure. Back to the pounds. We had a couple of pounds as well, pound CAD, pound franc. So pound Canadian, the way we wanted to work with that was the 2 waves. Pound CAD here. That's what we wanted to see, special cycle, push as a corrective cycle, right? So our expectations, 2 waves or a range. Both scenarios are acceptable. Both kind of happen because this is the 2 waves. Now this blockage is suspicious. So honestly, I lose the interest in the pound CAD. I still think it could push slightly higher to complete this divergence or anything like that, but it's not attractive for any new buys. Moreover, once this daily divergence would fit with the 4-hour chart divergence, meaning if we manage to do that, it will become a Sept. Two waves correction with bearish divergence would build up a possible sell opportunity. So the buys that we were accepting from previous week, so far so good. No new buys are attractive here. As you can see, two time frames, 4 hour and the daily, both are building up the divergences, and all that happened on the top of the ranging structure within the two cycle. Very suspicious. So pound CAD, as for now, moves neutral. Of course, for all those who are involved in the buys from previous week, go with that, manage that, make your profits, make sure you don't let randomness surprise you. But the new ones would not be attractive at that moment. So pound CAD therefore would be removed from the list until new setups arrival. And the last one of the pounds of the couple one we traded, just want to remind you, it's riskier due to all the fundamentals events we were exposed to previous week. So we wanted to see little pullback and exposure towards 100% level, which is around 122.60. Let's see what happened since. Put the levels here. So we reached our level, the zone we were looking to enjoy from. We got the retrace, we got the push. Pound franc mission accomplished. The question is what's next. So the daily currently develops bearish hidden divergence. No signs for that to end yet. As per the cycles, 38.2 is the magnet of 100 reached. 50% is a magnet of 100% expansion. As for now, there are no signs for a sell. This is the trend line that supports the rally continuation. However, the fact that the daily is building up a hidden divergence, the fact that we are right on the levels as we wanted, it's a good place to cash out at least portions. Okay, this structure, by the way, continues with the trend. So the way I see that is we should start and build up a rounding top. Will that happen around 100, or will that take us towards the full expansion of 161 in this big cycle? Early to judge. Definitely the levels and the facts from daily and 4-hour chart make it a partial cash out. Don't allow randomness to surprise you here, but the pressure remains bullish. We do not yet have any sell reasons. Cashing out partial of the buys, yes. No setups for sell, definitely. This trend is the invalidation, and as long as it holds, we can be exposed to corrections and further continuation. All that for the shorter term view, since weekly is as per the cycles has the potential to go lower. Daily did not yet provide false breakouts and 3 higher highs, 3 higher lows, so we can't make any conclusion for the longer term. That's why we continue with that on the shorter view, the lower cycles, daily with 4-hour chart combination. Okay, another one that is on the list is a pound dollar. Same story. Weekly has no obvious clear cycle we can work with. Also, we have as per the structures, you can see here between these two lows there is no divergence. right? So the only thing we can work with is if we refer to this also as a divergence. Many questions rising up from this validation. This or other way around, as confusing the weekly is, the daily is a special cycle with a divergence, with verification on the 4-hour chart, and mainly with a great hold of a massive level 120. Fundamentally, the environment is positive for the pounds right now. The vote for no hard exit, despite what Johnson is fighting for. Currently, they voted for a low that will prevent it. Unless there will be surprises out of Britain, the pressure for the pound dollar is currently bullish. So as per the cycle, the special cycle from the daily, targets is the 125, possibly 126.60 area. As a rule of thumb, we do not want to be suddenly surprised by one drop below 61 level. If it will develop two waves, welcome. One shot below would be very suspicious. We would remove that. Meanwhile, the expectations are for further continuation up. So buy retraces could be the right thing for the pound. So pound dollar is the new addition on our list. Keep in mind, it's a sensitive asset in the current fundamental conditions in the market. Technically, it's all correct, but as per the risk management, it should be adjusted accordingly. So that's from the majors, pounds and euros. Before we move to the Pacifics and the dollar pairs, any question? If there is any question, please write it down right now, guys. Pound yen. Good question, Anderson. Pound yen is also bullish. The only thing here for me is I could not find any cycles in play. There is no ending divergence on the weekly, which makes it less attractive. And the daily is again a repeating structure as we have it. We can use it this way, we can use it this way. No, apologize, there is no divergence. That's your only way, this special cycle. So it's a repeating structure as per the pound dollar and pound franc. Does it make it worth it to trade? Yes. Is that smart to be exposed to the same patterns exactly? Personally, I think no. Unless you drop the exposure to the rest. So yes, the structure here is the same. According to the cycle, this is what should be next. Okay. Once again, it's my personal view that overexposure doesn't really make any sense. Good. So let's continue then. Next ones, you're very welcome. Australian pairs. We have three of them. Aussie franc. Quick reminder. After this first push, we were looking for retrace and buys, continuation. Let's see where do we stand with that. Aussie franc here. So we got this and exploding further. So what's next with this pair? First of all, we remain bullish here, okay? Nothing changed. Our view remains bullish. We are trading here this double cycle. So the daily has to be the corrective two waves or a range. If we take a look on the daily, even if we work with the latest structure, we still have the room towards 50% in this trio. And even if we expand it further to the weekly, you can see in the 38.2 also has the room. So if the daily is the corrective cycle, that means we should be exposed to this. So any retraces are still providing our buy opportunities. Currently on the shorter view, I would not be surprised if we would from this zone start to see some fights and some slowdown, which further on, once again, I expect it to continue higher to the next levels, closer to 070. So the plan here is unchanged. For all those of you who missed the train, if this area would use it as a retrace, use that, verify bullish hidden divergence on the go. Likely that the first daily cycle would be this correction and further. So use the retraces with bullish hidden divergence or within two waves as opportunities to follow for the future buy. Of course, as this is a bullish structure of higher highs, higher lows, use a dynamic 61.8 as your invalidation area. If suddenly there is a move below 61.8 within one leg, it invalidates the trend, and be careful with that. Next one is the Aussie versus the Kiwi. We have been riding a beautiful ride here. Reached critical area, massive resistance zone, psychological 107.50 area, and cyclical zone. With the 4-hour chart verification, the 1-hour chart false breakouts. The idea here is that we are very likely facing correction. Correction could be within two waves, or as I drew before, this ranging structure with a false breakout and a false breakout, one top, one bottom. So the long-term buys are currently contradicted to the short-term possible sells. So how do we work with that? For those who are trading for the long term inside this cycle, no change in the view. Even for those who are trading the weekly only. Currently, the pressure is still bullish. No two false breakouts on the daily. No two false breakouts and lower lows on the 4-hour. So the pressure could remain, right? But on the shorter view, another false breakout here is very likely. Sorry, another attempt for a breakout here would be very likely fake one. It's rounding, and I expect a fight here. This fight, once again, could be two waves. This fight could be a range. Sorry for the bad drawing. Let's try to do it this way. Yep. By the way, for all those who wonder how do I draw, I use this wonderful software called Epic Pen. I use the paid version. There is a free version which has enough components to use free. So that's for the Aussie versus the Kiwi. So what do we do in that? For all those who run the buys, there is no reason to cash out full of them. For those who are looking for short-term trading, you have the right place for that. You also have the structure here of lower highs, lower lows. Now it's developing the two waves. So if we manage to break below this trend line, that should be a good place to look for the sells. Alternatively, if it is a range, then let this cycle build in a range. And then once the 4-hour chart divergence would make a false breakout, 1-hour chart would have to be a cycle by itself, which currently looks okay. And if there is divergence, this should provide a good sell opportunity. So that's for the short-term traders. that could enjoy from some sort of corrections. Of course, invalidation for that is if this 4-hour chart leg is not a cycle by itself on the 1-hour chart and we get a breakout directly straight and hold, then we will have to recalculate the trip. That's for the Aussie versus the Kiwi. Aussie versus the dollar is our next one. That's our expectations, bullish. We were after the buys. So here we are, likely ending the first journey, the first rally of the journey. Critical zone clearances. A lot of stop losses are located in these areas. With this divergence, it has to be a cycle by itself on the 1 hour. Obviously, it is. It could be definitely used as triple descending cycle. It could be broken into something like that. Doesn't matter. It doesn't matter. The idea is it has the higher highs, higher lows, which means bullish constructive structure. So once we get the retraces, we expect the second leg to continue. The weekly cycle with the daily cycles should bring this structure for a play. Therefore, my view remains this is the expected zone for retraces. As we are riding 20 candles on the top of the Bollingers right now, we can see that dropping all the way down to the dynamic lower band, or at least getting closer to that. Likely to assume this is going to be a bullish hidden divergence, and then the second leg. So the plan remains unchanged. That's from the Australians. New Zealanders, we have two of them. One of them is also the New Zealand dollar, which we were looking to trade two waves to the upside. Where is the New Zealandian? Right here. So here we are. 1, 2. Now the thing here is that we are in this zone of a possible triple cycle from the weekly with a beautiful engulfing. That means the daily could be the corrective. If the daily should be the corrective, then this leg of the daily has to be cycled by itself. And that's what 4-hour currently is trying to build. We have the first, we might have the second. If it manages to make the push for the third, then this is the first leg of the daily cycle. And then we go deeper. Meanwhile, that's not a structure, right? And the daily is developing the bearish hidden divergence with opposite band, the top band, as a target of the rally here. Remember, Bollinger Bands band to band, duplication, 20 candles, right? Bullish divergence. That's what we expect to happen. 62.50 psychological quarter of the round number. Beautiful hold. Classical candle pattern structure. We discussed about it previous week. Beautiful formation. Now, once again, it's slowing down. And that becomes 2 waves. No 3 waves yet in the play. So the first leg was a cycle by itself on the 1 hour. The second one becoming a cycle by itself on the 1 hour as well. This is a place for cashing out. Partial, of course. Let the rest run as the expectations are yet for deeper correction. Right? And if it will manage to create these 3 higher highs, 3 higher lows, voila, we have the okay to go with the longer view. That's for the New Zealand dollar. So far, so good. New Zealand and Canadian, same story. We were looking to, we got the two waves here, 1, 2, pull back, which happened here, and expected the next push to continuously make the 3 higher highs, 3 higher lows. And here we are, 1, 2, drop, 3. So this one has the structure of 3 higher highs, 3 higher lows right now. We can say, as long as 61.8 hold successfully, we should be looking for retraces and further buy. Why would we do it at all? Simply because even if this is the only short-term cycle we can apply here with this divergence down to this area correction and a drop, even if that's the case, we can head towards the 38.2. And that's what possibly builds it like this. So the pressure remains bullish while we are above 61.8. And don't forget, once you have some signs against you, partial cash out, or any other sort of management, trailing the protection, right? Tightening the exposure, any combination of both, anything with that you have with your managed risk management strategy, when you have signs against you, it's a safe from the market. Take a step, take an action. Do not let your trades under randomness, under possible randomness. So that's from the New Zealandians, which also work fantastic. Cat franc that we were looking for sell setups, the one that we had previous week, this one failed. We said we are looking for the next setup. As you can see, no new setups, no new divergence in play, and moreover, break of the trend following trend line. Currently game over, neutral for me. I do not see yet any cycle structure here, so we will need to see for a bit further development. This could be at the end of the day some sort of a consolidation for the breakout. We will see how that goes. Meanwhile, I keep it neutral, nothing clear. And the new one on the list, dollar yen, which has this double cycle in play for us. Great hold with a bullish divergence here and here. Daily fitting in with the last leg as a cycle by itself. So we are in corrective mode towards 108 zone. So my expectations are here. We're currently building here the triple cycle, likely to see some corrections, which should use us for the buys. So the expectations are buy retraces towards 108, maybe even slightly higher, somewhere in between 108 to 109. That's from the Forex view. That's the pairs I'm following for the coming week. As you can see, majority of them worked perfectly, besides the cat franc, worked perfectly on the last run. They all pay. What do we have else to do is to enjoy. Indices and commodities. So let's start with commodities. Natural gas is our buy. This is where we are involved with. Right here, bullish since the break of the trend line. Do we have any reason to cash out? So let's pull out the Fibonacci numbers from the weekly cycle. The 270 with clearance zone is coming. 200 moving average, I would definitely not ignore it. Pay attention to this extreme divergence that is building up with the 4-hour chart. 20 candles right, and extreme by itself building up. This area is a great area for a cash out. Once the candle structure would be becoming bearish, some official bearish engulfing, kicker harami, whatever it is, or even on the lower time frame, once this will become the false breakouts or 3 lower lows, 3 lower highs, this is a make the money sign. So this is the first leg in what is very likely to become deeper correction towards the 32 or the 50% of the weekly cycle. Great run, great trade, unchanged view, just a good zone for partial cash out is coming soon. Gold. We got in a minute I'll show the daily cycle. We got 2 false breakouts in play, 1, 2, and we got the lower lows. At that moment the convergence was not completed, so it's a bit more aggressive. But later on, with the new low created, as you can see, not the first low, with the new low, we got a convergence. So as per the daily cycle, we are after the corrective mode, meaning sell the rallies. The 1-hour chart already back then built this lower highs, lower low structure. Sell the rallies is a good plan. We got the clearance zone cleaned here. Bearish hidden divergence in play and sell continuation. As you can see, it tries to restructure the lower highs, lower lows, and it's very welcome because the sell the rallies is still the plan. So the gold plan was and remains bearish, unchanged. And as per indices, we have one in play, actually not in play, in follow-up. This is the German DAX that we are still after the triple double cycle. And of course, we require this trend line to be broken. Bearish hidden divergence is there. 4-hour chart verifies that by its own divergence. Break above the rising trend line is the call to look for sells. So it's on the watch list, on the waiting list, not triggered, just following. And stocks, we have our Adidas, which we want to sell. Same structure, lower highs, lower lows, 2 waves correction. We need the break of the trend line, and we are good with the further sells. And we have buyer, but on this one we are bullish for the long term as per the massive cycle. Of course, we can use this one only. All of them would be acceptable. So our expectations for the long run are towards here, unchanged, holding, running. 2 cryptos we have in play, Ripple and Ethereum. So we're still holding the magnetron of this cycle. So nothing really changed as per the Ethereum. The expectations are still to the upside, unchanged, basically. Nothing else to say here. And the Ripple holds exactly the same. This triple cycle, it holds. The divergence is there. We could see a spike further towards the psychological 0.20 and full expansion. It's acceptable in that case. But the idea here is expectations for the rallies. Good zone to look for the buys. A new one that starts to be interesting is Dash USD. Reason, same cycle. Let me just remove that here. Same cycle in play. Bullish divergence, 4-hour chart, false breakout and convergence. But mainly, look at the structure, the one that I love to see. Higher highs, higher lows. So I want to see two waves and further buys here, or some sort of a range. Corrective cycle, basically. So Dash USD adds on the list with 61.8, which is around the 82 level. The dynamic 61.8 as invalidation. Invalidation for what? If we have one short leg below it, it would invalidate the whole idea. That's all for today, guys. Any questions? Anything on your side? Once again, meanwhile, if you are asking, then I would like to welcome all those of you who are new to our family. Welcome. I hope you will find our trading useful, beneficial, mainly educational, and developing you as a trader. I wish you a wonderful week. Thank you very much for being here, and I'll see you in a Telegram chat later on. Ciao for now.